Chipotle stock is down 30% year to date in 2025. And this is one of those companies where I highlighted coming into this year, I wouldn't want to own this business because of the valuation. It was trading at such a premium to other restaurants, and many investors felt like the company deserved the premium, which it did. It's one of the best performing restaurant businesses in the world, but I felt like the premium was overdone, and this year the valuation has corrected. So a lot of investors are now looking at Chipotle, trying to understand what's going on, and is this stock a buy now at these lower valuations? So I'll talk a little bit more and answer if I think this stock is a buy at these new lower valuations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Chipotle informed investors that in their most recently completed quarter, digital sales were 35.5% of total sales. Restaurant level margin came in at 27.4%, which is a decline of 150 basis points year over year. Additionally, the company opened 61 new restaurants, including 47 Chipotlanes. Digital sales, remember, the company was one of the best in the early days of the pandemic, switching to digital sales and online ordering for pickup and online ordering for delivery. And they've maintained that advantage in that market. Their app and digital business is doing really well. The restaurant level margin is under pressure. The company's faced significantly increasing cost of wages, and now with tariffs significantly increasing cost of commodities is also weighing on the company's profitability per store. And the company's performance was so good coming out of the pandemic. Remember, they were on an annualized pace of about 200 new restaurant openings, and then they accelerated that to closer to 300 per year new restaurant openings. And I think that's not been working very well and it's not the only contributor, but since they accelerated that pace of new store openings from about 200 to 300, the comparable store sales have not done very well. It could be a sign that they're cannibalizing existing locations by opening new locations too close to existing locations. So it's hurting the comp sales growth. But it could also be strategic factors. Remember, the company lost its superstar CEO, which was poached by Starbucks, and now Brian Niccol is working at Starbucks. And so that could also be contributing to the company's underperformance here in 2025. So recent trends were positive, but considering the volatility in the consumer environment, the management team is anticipating comparable store sales to be flat for the full year. So that means zero growth in existing locations year over year, despite the fact that inflation will be roughly 3%. And so if comparable store sales are flat, that means people are buying fewer things, and the unit sales, the number of customer visits, the number of customer transactions is likely declining at existing locations, which is a troubling sign, to be sure, after many, many years of growth in this metric for Chipotle. So with that said, they have a strong plan to build their industry-leading value proposition and accelerate transactions. The fact is, most markets for around $10, you can get a handcrafted chicken bowl or burrito filled in abundance with the best ingredients. Yeah, that's true. If you want specifically chicken and you don't want guacamole, which they charge you an extra $2 or $2.50 now. So if you're including guacamole, that's $12.50. And you compare that with, let's say, one of their competitors, El Pollo Loco, which you can get one for with guacamole for around $8. So competitively speaking, their price point is above average. Um, if you compare it with Cava, they're lower priced, but if you compare with other providers, they're a little bit more expensive. And overall, the cost of fast food or eating out and groceries has increased due to inflation, and consumers are pulling back. They're spending less money, and this is one of the businesses that is being impacted by the pullback in consumer spending. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street analyst. I've made this highlighted document available for my channel members, and you can join for less than $5 a month. You can see the link in the description for all the benefits you get for joining our channel. So one of the things Chipotle has been really good at is rolling out new products. And they have a nice strategy for doing this, and they talk a little bit about how they do it. So for this most recent rollout, they plan to do a phased stage gate approach, and they anticipate by the end of the year, a high efficiency equipment package will be in hundreds of restaurants, including the sub-region where they plan to introduce their catering test in the fall, and all new restaurant openings beginning in the fourth quarter. So what Chipotle usually does is they'll take a new product or a new process and they'll roll it out to a segment of their overall locations. So they'll test it in that segment, and if it works well in that segment, let's say a region or a type of location in different regions, whatever their strategy for segmenting, a small percentage of the overall number of locations they have. And if it works well, they roll it out to a larger number of stores. And if it works well, then they roll it out to all of their locations. And they've been really good with this. They've been really good at executing these kinds of rollouts. It's been one of the reasons why they've been one of the best performing restaurants. If you look back on an 8-year period, 10-year period, going back all the way 2016, they've been a really good operation. So let's get into valuation now. Chipotle, following this decline year to date in 2025, is now trading at a market price of $42. The intrinsic value I calculated and updated today for Chipotle is $44.34, suggesting the stock is fairly valued at the current market price. Now, when I look at the company's forward price to earnings ratio at 32.5, this is closer to the lower end of where this stock has traded for according to this valuation metric. Going back to earlier 2025, I would say a forward PE of around 32.5 is roughly fairly valued for this business when we're looking at it longer term. But there's been a lot of change at this company that suggests that I need to look at this business not just on the performance in the longer term, but the performance going forward, looking ahead. And a forward PE of 33, looking ahead at the competitive dynamics, the change in leadership is a big deal, right? Brian Niccol had achieved phenomenal success at Chipotle, and there's question marks surrounding the new CEO if they can achieve similar results. That remains to be seen. I'm not going to give the company the benefit of the doubt there. I'm not going to give the company automatically give the company a rating of an excellent performing business operation with a new leadership team, similar to the rating I was giving the company under the leadership of Brian Niccol, which had been excellent, right? I'm not going to just assume that the new leadership team can deliver the same kind of results as the previous leadership team, because the previous leadership team had been so excellent that it's difficult to replicate that level of excellence. So I'm not going to give them that benefit of the doubt. So because of all those reasons, I'm going to keep Chipotle stock rated as a hold for now until the company can deliver better performance, especially on comp sales growth, looking at the dynamics via cost. So for now, I'm keeping Chipotle stock rated as a hold.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.